What's up, guys? It's June 30th, 2025. Had a trading range day today. Expanding triangle, always a tough. Expanding triangles, in my opinion, are one of the hardest days for a breakout trader. Started out rangy, and then we expanded right at the end of the day. I want to give a quick shout out to all the members and subscribers. I appreciate you guys joining and following me along. Yeah, and I'm dropping new members videos, trade breakdowns, how I'm entering, what I'm thinking about, and how traders are getting trapped because the markets are 50-50. So when a trader gets trapped, that forces one side to do something else. So for a brief moment in time, that there's a directional bias in the market. And I'll give you a quick example right now. I'm in a trade in NASDAQ. Here we have a strong bear channel. Bulls bought up here, then buy more here. Their break even is this 50% mark. When the 50% mark is hit, bulls will be selling, front running bears will be shorting, and us second leg traders are looking for like one pullback, like two. That's what you see here. I'm currently in profits, but the trade still has some time to go. So we'll see how that goes. So that's what I'm doing with the memberships section. So if that interests you, join the memberships and you can learn how to, enter the markets with when the direction is in our favor. So back to the breakdown. We had an expanding triangle trading range day. I think it was pretty hard. I did all right today. I had to break even once, and I caught a swing down when I was at work. I started a swing right here. Got my stop was right around here. Exited there. I went for a swing down for the gap close right when the morning started, and when that happened, I started to realize, you know what? My system is scalping. Most of my profits come from scalping. So after today, I'm pretty much done swing trading because I missed so many setups. I could have made more money scalping than actually swinging. And so here's one setup because I shorted the 50% level of this bar, and look, I was out on 2 bars. Since I was going for a swing, I ended up scratching the trade right around here. So look, there's one setup. Here's another setup that would have hit 3 bars pullback. Another setup that would have hit. Kind of hard to see. Let me change the color of this one. So look, 1, 2, 3. I was looking for 3R, and there's 3 trades right there. And that's when it kind of clicked on me, like, hey, you know what? I backtest scalping. I talk about scalping. Why, when it comes down to live trading, I go for the swing? I could have just made 3R in like 30 minutes. Oh, not 30 minutes. Yeah, 45 minutes could have been 3R. And I was already up from the overnight session. I got this short, got filled on bar 1, shorted it again. So it just makes more sense for me to just go forward with scalping. Just want to share that insight with you guys today. Oh wait, this is NASDAQ. Let me pull up ES and we'll get started. Okay. Yeah, I trade NASDAQ anyway, so I'm glad you guys could have seen that. ES has similar price action, just NASDAQ moves a little bit faster because there's more points. Still an expanding triangle. Trade looks like it would have worked. Maybe I get stopped out there, but generally it would have worked anyways. So, man, last week was a strong bull bar. We're really close to all-time highs. Very close to all-time highs. What did we trade today? We traded 12, 67, 74, 3, 10. We traded almost 17 points from all-time highs. Oh, there we go. That's a little more accurate. A little more than 17. Yeah, about 20, 22 points away from all-time highs. Be interesting to see what happens in the next couple of days. We're in the middle of the year now. We're officially into the 7th. Starting tomorrow, right? Is there 20, 31? We're very close to the next month. That's interesting because we're in an interesting spot. We could sell off. Bears want to like 1 deep pullback, like 2. Bulls wanted this to be a start of a breakout into new highs and keep rallying. Daily chart. This is the daily chart. This is the weekly chart. Daily EMAs plotted on the weekly chart. Same EMAs. Here, trading range. Bullet in a box analogy. Shoot a bullet in a box. The momentum will generally come out the same way. We can see that here. The bullet's got momentum. So, cool to see. Leg 1, pull back leg 2. The second leg, it took 3 bars. Let's see. That's the size of the leg 1. So the leg 1's stronger than the leg 2. Doesn't mean the leg 2 is over. We could keep going higher. I'm not looking at measured moves. I'm just checking how big the leg 1 was compared to the leg 2. Keeping an eye on this trade right now. Bears are selling at the EMA, so that's good for me. Okay, let's do the breakdown. Yesterday was a trading range day, expanding triangle actually, but I think yesterday was more tradable. Big gap up with leg 1. Then we sold off to a new low, and then we rallied back to around the breakout point around bar 12. Yesterday's expanding triangle was more tradable than today's expanding triangle. Really good limit order market. Big gap up, bar 1, bear bar closing out low, bar 2, sells off in the rally, so it's a pullback bar, and then we see the second leg with bars 3 and 4. Again, I was in that second leg, but I didn't take profits. And then the rest of the market starts to take profits because we can see bull bars, but all these bull bars have more tails. So let's just know that bears are still trying to sell around the midpoint and high of bar 3. Bar 8 pulls back, so we have a gap up. We have bullish momentum, deep pullback. This already puts the market into a trading range. And now bulls are trying to go for a new high. Instead, they get 2 to 3 legs higher. Leg 1, pull back leg 2, pull back leg 3. Bar 11 is really bad pullback for the bulls because it breaks the bar 2 low, it breaks the 8 low. That's where stops are at. See, the bulls were willing to cover themselves, so the bulls that bought up here, again using the 50% idea. This is not a step I would take, but look, the bulls that bought up here buy more on the low of 11. They actually make money on 12, and then they sell out, and you get your, depending on where you are, if you short 50%, you get your 1R on 14. Again, that's not my setup because I look for a few specific things that I talk about more so in the memberships, but it has the context, so in this situation it'll work. Again, it goes context and then entry. Here we are approaching the target. Same situation, right? Bulls bought up here. Bulls bought up here. Bulls buy down here. Break evens right there. Bulls get their break even. Bulls are selling. Bears are selling. Second leg traders are selling. And now we're looking for that retest of the low minimum target. So you can see it works. I've had a lot of success, and this is one setup that's easier for me to stick to. In the past, I've traded like I1Rs for a little bit, I've traded opposite I1Rs, I've traded this, I've traded that. But this setup really resonates with me because I understand the context behind it. And it's actually making me better at spot I1Rs, which is kind of cool. Anyways, so you saw that, 3 legs up, it sells off, 14 and 15. Now we have trap bears down here. They're going to short more higher. Well, hold on. We have trap bulls up here. They're going to buy more. Rallies to the 50% mark on bar 19. You can even say it was hit on 15, and that's that tail. So actually, I missed this trade because I was looking for a swing, but I shouldn't have been. Leg 1, pull back. Leg 2, hit. I would have got filled because this is my setup, and I put my target. I put my entry 1 tick below the 50%, so I would have got filled and exited on 16's tail. That's the type of trade I like. Very fast trade. Overnight session, I have to change my expectations because it moves slower. I just want you guys to see this trade. It's bouncing right off support. I'm just going to go ahead and close. Sometimes when it's bouncing off support, I just close out. I mean, look how close it is. Very close. Good enough. So that's the setup. And it works. It works because of the context behind it makes sense. And now look, we do the opposite for the bulls. Bulls get a 2-legged rally, 15, 16, pull back 17, 18, rally 19, 20, leg 1, pull back leg 2. The bears that shorted up here. Hold on. Let me make sure I'm saying this right. So the bears that short right around here, around the EMA, they're stuck. So we put our first fibs there, and then bears are going to short more higher. 50% is hit. In this situation, 21, 22, bears are making money, so they make a little bit of money. And since this is happening, bears are making money, we know it's a trading range because bears should have been getting out a break even. We know they can't make money. Bears made money, trading range behavior. Nonetheless, if you wanted to get the leg 2 of this micro channel, leg 1, pull back leg 2, Bing, bang, boom. You guys can start to see why I really like the setup. It works in trends. It works in training ranges. It works because the context is there. That's what I like. I can understand the context. And then we'll talk about it again. We got a good rally, 23, 24, 25, 26, 27, 28. This is one leg. However, there are tails, so we could count it in a different manner. Leg 1, pull back leg 2, pull back leg 3. Showing off to get a second leg. Bears that short down here are now trapped. They're going to want to short higher and get out at break even. Man, the more I'm going over these trades, the more I realize today was not the day to go for a swing. Look, break even, bounces off 30. You could scalp out early, or even if you held it, you would still hit your 1-to-1 with only a couple bars of drawdown. 15 minutes tops drawdown. And then it rallies right to it. Now bulls have had 3 visible legs. This is a wedge top. Leg 1, leg 2, leg 3. Could even argue leg 4. So you could argue a lot of things actually. It's a training range, so it's hard to count legs. It's a Bravo channel. Now we do the same thing for the bears. Bulls are trapped up here. They're buying highs, hoping for a test of this. Instead, it sells off. They buy the low of 44. And then look, again, the math lines up. Put the tail here. Put out the low of 44. Look at 45. Bulls get out, break even. Sells off for leg 2. Leg 1, pull back, leg 2. Just so you guys know, this is the style of, this is the new way I'm going to be doing breakdowns, because I just need to ingrain trap traders into my head. And after these examples, I hope you guys understand why it's important to spot trap traders, because you find out where the break-even traders are going to try and get out. You put your order there to go the opposite direction. So the bulls are the break-even traders. You put your order here, and now you're selling with bears, you're selling with bulls, and you're the second leg trader. Three types of traders doing one thing. It's really important to understand that the markets are 50-50, and what makes the market 60-40 and at brief moments is trap traders. So we've all taken the Al Brooks course. We've all done, a lot of us have done the I'm sorry course. This is a wedge top. This is the bull channel. This is the leg 2s. I like to focus on market cycle, leg count, and now trap traders is the main focus. Let's do the exercise again. We see a tail on 45. We know bulls got out. Most smart bulls got out at break even. Weak hands bought this for a reversal up, a leg higher. So then we do the exercise again. High of 45. Last time bulls got trapped, they buy more lower. 3 bear bars in a row, chomp to get a second leg down. It's a macro channel on a lower time frame. Filling on 48, exit on 49. Man, even I think over here, right around this area, there might be one losing trade because of the tail on 11. But this setup would have banked today, big time. And that's funny that today I decided to go for a swing because the gap up. I thought bears can close the gap. Same situation. Bulls that get out here, smart bulls get out break even. Weak hands are trying to buy this for the reversal up. They're underwater 48, 41. Excuse me, they're underwater 49. 49, 50 has a pullback. So maybe if you miss the entry because it happens too fast, you can get filled again on 51 and exit on 51. Maybe you get filled on 51, you exit on 53. A lot of leeway. Again, I scratched my first swing and I took the swing again from 42, 43. I just shorted the market when I was at work with my stop up here, and I got filled somewhere on 54. I don't know if 54 was a news bar. I checked today and there was no news, but it has news bar tendencies because it rallies and sold off. So my stop wouldn't have got hit. It was right up here. Bears that shorted here are now trapped. They're going to want to short more higher. And would you look at that? Bears short here. Well, they would actually short right around the 56 high or maybe this 59 high. So now their break-even price is in the middle of the fibs, the 50% thing. So what I'm getting at is that from the low of 54 to the high of here is bullish. It's a bull leg. Leg 1, pull back, leg 2. You want to catch a whole leg 2 of this and look at the rally. Comes to the 50%. Kind of a deep pullback, bar 63. Bears do make money. And then boom, bulls are off to the races. Nice leg counting for the end of the day. Leg 1, pull back leg 2, pull back leg 3. This is a good time to do the exercise too, because all day bears and bulls were able to get out at break even. And oh yeah, and if you guys can hear that beeping, that's the Discord. There's gonna be a link for the Discord in the comments if you want to join and talk more. We'd love to have you. So bears short the low of 63. They short higher, 68, 69, and maybe 70. Look, this does not come back to the 50% mark. So for me as a trader, this is the trade I would miss. But from a contextual perspective, this means this is a strong breakout because bears are taking the loss. There's no chance to get out at break even. If they do get out at break even, that means they shorted one contract here and 4 or 5 contracts up here. And that's not the context I'm looking for. So this is a strong breakout. It gets its second leg. But then we can do the exercise for right here. Bears short the low of bar 70, short higher 72. They get out at break even 74. Boom, bears buy the market. Front running bulls are buying all up here, and second leg traders buy up here. 3 types of traders buying the market. Hope you guys can start to see why I think this is important, and this is the direction I'm going to be taking the breakdowns. Hope you guys had a good one. Hope you guys learned something. If you learned something, share and show. Don't be a hoe. Hopefully I'll talk to you guys in Discord. And if you want to learn more, hit the membership button. Hit join right below my name. Thanks, guys. You have a good night. It's we're starting a new month. 5 months left in the year. Let's make it let's finish strong. Thank you for your time, everyone. Bye.